we have not so far worked with third-party loan originators or partners. Yes, and that will change in the future. We will onboard some companies from outside that are not fully owned by myself and Davis. So all of this talk about conflict of interest, like how do we make sure the loan originators are good, is completely meaningless. And we as kind of entrepreneurs are looking to do some new things every once in a while for good reasons, not just because it's exciting, new, but to make money. And that product will be coming from an originator in Latvia. And then we decided, okay, maybe it's worth not risking some kind of backlash from Latvian regulator, which is known to be pretty retarded, for lack of a better word.
In the name of my community, congratulate you as being voted as the most popular platform in the current peer-to-peer market environment. You probably have seen the news. In general, like we see, like there's increasing origination volumes month by month, very high demand. Now, recently you crossed the threshold of 10,000 investors, now being voted as the top peer-to-peer platform 2023, at least by my community. Why do you think Esketit has gained such popularity recently?
A good question. So first of all, yeah, that sounds like a lot of nice compliments, so much appreciated. I think one thing is that we should not ignore is that we have been in the business of consumer lending, and we participated in the platforms also, like Mintos and like Mintos is, for some time, basically since the beginning of the P2P industry or the P2P consumer lending industry. So people know our brand and they know us. Us meaning myself, Davis, my co-founder, our company that used to be called Cream Finance, now it's rebranded to AvaFin. So it's not like we're exactly completely new to the industry. Pretty much vice versa. We're one of the few companies that kind of started this online consumer lending, made it popular in terms of growing into different countries, and then also participated in the peer-to-peer creation or connecting the peer-to-peer to our consumer loans industry. So I think that's one thing. Second thing, which we have always really considered as very important when it comes to our investors, when we worked only with private investors in the beginning of, let's say, 2012, when we started the business, which was to make sure we never lose other people's money, make sure we never lose our creditors' money, our investors' money. And that is pretty essential to us. And it seems like everybody says that, but as you can see for sure now, these days, looking at all the platforms that, all the platforms say that they take care of their investors' money, but the reality is very different. You actually have a small number of platforms that have not yet lost investors' money. So I think, of course, that helps that we haven't had major issues, defaults on our platform, and so on and so forth. Of course, if you think about it a little bit, you understand that we've been in the industry in terms of the peer-to-peer platform, in terms of Esketit, only since, 2020? So for 2 years we've been operating. And of course, we haven't gone through all the crises that other longer standing platforms have gone through. So for sure, in the future, we know that we will have crises that affect the whole industry, and that will mean people will start pulling out money and so on and so forth. And I'm sure we're going to deal with it. So for sure, our performance has been there for a shorter amount of time. So that's a considerable factor, and I just hope and we'll work very hard to make sure that performance continues. So I think those are the main factors, and of course, then the other things which I think far less important, but still relevant, the UX. You have to have a good functionality, good UX, all the key things that an investor would expect from the platform in terms of practical tools and user experience need to be there, and our platform gives that. And maybe the third or fourth point goes to our team. And let's say you can see that in our Telegram chat, and whoever is not there is welcome to join, that we respond quickly, we hear and listen to what our investors and our customers are saying, and we're building the product so that it is usable, it's convenient, comfortable, and we really keep that in mind. And again, it's nothing extraordinary, just a principle for us. And so if you put those together, then you get a good result.
Yeah, thanks for pointing out all the various elements. The question is, do you feel like there was some kind of a hockey stick moment where it like really took off? I mean, like just like reviewing the numbers, it seems like very much organic. But I feel like despite what you said, okay, you know, you haven't undergone any, let's say, bigger crisis compared to other platforms. Still, I feel like 2021, you know, and with war in Ukraine and many investors, you know, with
Yeah, that was
rising
the middle of the
inflation,
crisis too.
became also very, you know, like careful. And you see this also reflecting the stagnation on other platforms, whereas, you know, like the demand for Esketit has really increased in the past 12 months and it doesn't seem to have an end. So do you feel like there was also a specific moment where, you know, the momentum shifted?
Yeah, good question. I maybe a little bit. I think the way I would kind of put it simplistically is for the first year, we were working hard on attracting investors, trying to figure out different sales channels, offers to investors in terms of discounts and different motivations. And we needed more money than we had investors giving on the platform. And then I think, you know, because of all the work that we put into marketing, figuring out which channels work for us, building this community, also on Telegram, and just being consistent with the marketing efforts, one, and second, also consistently having enough loan supply on the platform. As you mentioned, there are a lot of platforms that are just not having enough supply at the moment. So we've had this opportunity or situation where we have had enough supply to give to investors. And then my speculation, this is just my speculation, is that the third is because other platforms maybe have not had loans to offer, and because of the war, Ukraine war crisis, that has affected a lot of loan originators. It has not affected us because we've been fortunate and smart enough not to have too much exposure in those countries. I suppose some of investors are migrating from loan originators and platforms that have exposure to those countries to places where there's no exposure or less exposure, and our platform is like that. So again, a mix of those factors, I think, is what resulted in a faster pickup, I would say, kind of middle of last year. Yeah, so the first year was kind of getting into things, figuring things out ourselves. We had to really understand exactly what we're doing, how we're attracting investors. And then second year, the last part of the year of 2022, that's, I would say, where things were picking up faster and without this constant effort and pushing from our side.
Okay. Now you mentioned something very interesting, which is the loan supply. Obviously, so far you were able to fuel that growth with the various loan originators that you have. I was wondering, how do you maintain this kind of growth, assuming the demand will continue to increase? How do you balance both sides, supply and demand, while, let's say, ensuring also good quality of the loan portfolio?
Okay. I guess for us, it's been simple in that we have not so far worked with third-party loan originators or partners. Yes, and that will change in the future. We will onboard some companies from outside that are not fully owned by myself and Davis. The premise that we started with the platform and our positioning with investors is that we are onboarding loan originators that are our companies. So all of this talk about conflict of interest, like how do we make sure the loan originators are good, is completely meaningless. The website, the platform, Esketit, is part of the loan originator. All it is, loan originator is saying, okay, this is my company, I'm doing this business, I want to borrow money from you, please lend me money. The loan originator is just facilitating a website where that's all organized. The concept of conflict of interest or us having to check the loan originator is completely meaningless because I am the loan originator. That's my core business. The platform is not my core business. I don't see it as a business in the first place. All it is it's a cost center that costs me money. That's how we've always positioned our view on Esketit, right? And that could change with future when there are more investors and there are more opportunities. We might want to build it out into a standalone business, but that is not how we started, and that's not where we are at the moment. It's just a tool for us to fund our loan companies. So there, and I mean, my everyday job for the last more than 10 years is to make sure I build successful consumer lending businesses, and we know how to do it. We have financial results, experience, reputation, etc., and investors trust us their money. So that kind of answers one part of your question in terms of how do we make sure we have the right loan originators. It's you know, those are our companies. All we really do, and most of the time we spend, myself, my business partner, our teams, we spend on building out successful, well-run loan originators that are not dependent on venture capital investing or some kind of funding rounds. It's focused on making sure it's profitable in a short space of time. Okay. The second, more complex, or like, let's say, the trickier part is how do we balance that we have all the time a growing number of investors and a growing number of loan supply on the platform so that everybody's happy, right? And that's not easy because the loan originators, the loan supply, that simply depends on how quickly can we scale our existing loan portfolio volumes of existing companies and how quickly can we launch new companies. And both of those challenges have various limitations. It's not easy to launch consumer lending companies around the world like this, right? Especially now compared to 10 years ago, where almost in every country there's regulation, legislation, some kind of limitations, you know, KYC, AML, source of funds, all sorts of things in order to get to a starting point, right? That's one. And second, the existing businesses, they have like some natural speed at which they can grow. Some can grow faster, some can grow slower. And so that is a real challenge for us to make sure we get enough new loan originators of our own to offer investors. And that is the challenge we have now, because we would love to have more lending supply on our platform, but we don't have it. We will have it in a foreseeable future, but that's what we're kind of working on now.
So for me, this opens up a lot of new questions. So it would have been one of my follow-up questions just to see, like, if at a certain point you will also onboard external loan originators. Can you go a bit more into detail when you feel like this is going to happen? And the second question, where do you see also, let's say, the ceiling in terms of the origination levels in the current setup, assuming you wouldn't add new loan originators also from your side? So before this becomes a necessity for Esketit also to collaborate with external originators.
Okay, so our first question, the answer to the first question is yes, we will cooperate with outside loan originators, and we will launch something in the following months, I would say, certainly within this year. That's the plan, unless some apocalypse happens. That's one. Second, I'm not sure if I got your question. So how long can we keep growing our existing platform and with our own loan originators before we have to onboard third parties? That was your question.
Exactly, yeah.
Well, the answer to that is that we could do that kind of indefinitely. It's just the speed of growth, right? We could grow at negative rates, or we could grow at, like, I don't know, whatever, 5-10% per year, which is obviously very slow growth. Because the lending companies that we have on the platform, all of them, the various countries from AvaFin, our Jordan business, also soon we will probably launch our Sri Lanka business on the platform. They are all growing, yeah, each at a different pace, but they are growing. And so therefore there is new supply all the time, but it's not at the moment growing as fast as interest from investors. So the answer is, it just depends on kind of patience on all sides, how long we want to keep growing slowly. In order to have a next jump in originations, the next jump into the growth of our portfolio on the platform, of course, we need new loan originators. Yes. And we will have from outside third-party loan originators within this year, and next year we for sure will have our own new lending companies joining the platform.
Okay, so just to summarize again, there will be external loan originators on the Esketit platform within this year. Is that correct?
Yes.
Okay. Do you put a certain emphasis that those companies are solely focusing on short-term consumer loans, kind of what you are like most familiar with, or do you also look at other verticals, real estate loans, business loans, something of that nature?
Yeah, we look at other verticals as well, real estate loans, business loans, and other opportunities, let's say what we end up deciding on and onboarding. And the reason for that is because they are different products with different risk profiles, and we here have to think more about investors than we think about us. Of course, it's easiest for us to do due diligence on unsecured consumer loans companies that are in the same space as us. But we think for this diversification and having just different types of products for our investors to invest in, and our assumption is that investors would be interested in investing in something other than the types of loan originators that we provide ourselves.
Okay. Well, if I can just mirror right back and would say, like, from my personal preference, I honestly like platforms that stick more to their own originators, that don't board external, and also honestly that maintain a certain, the same level, the same profile level in terms of short-term consumer loans. Because from the outside looking in, I feel like it's a matter of, okay, where do you drive that competence from? Like investing in some mortgage loans in some countries you haven't been operating so far. So how do you want to ensure like you do a proper job, not just offering a bigger and more diversified product portfolio for your investors, but also ensuring like, those are safe and sound investments as they are used to from Esketit?
I 100% agree with you. That's a principle to which we are also abiding by. There is an answer to that, though, because if you would only do what you know how to do, you would never do anything new, right? And we as kind of entrepreneurs are looking to do some new things every once in a while for good reasons, not just because it's exciting new, but to make money. And with that, our answer is when we will onboard these different loan originators from new categories, we will have a very strong team or people that have aligned interests as part of our team to make sure that we have very good know-how to be able to do due diligence, control, oversight, financial analysis, and so on and so forth on those new partners. Yes, we would not go into a situation where we talk to someone, we like their business, we like their results, and then we suggest them to invest to our investors just because it's a nice company. We have to make sure it's something that we understand very well. And at this stage, I mean, we have companies that employ at the moment close to 1,000 people. So we have a lot of resources at our disposal. We can hire very capable management, we can pay them, we can motivate them with shares and so on and so forth. So we are able to go into new directions while understanding the risks and controlling them. And in any case, so that's kind of one thing. Yes, it is a additional risk to some extent because of the things you mentioned. You're doing something new. But second is we have learned, like for example, for the 10 years that we've been building AvaFin, we only operated online. We only provided loans online. Now, in the Middle East, in Jordan, for example, we do offline. We lend in our own branches and we lend in partner branches. And that was know-how that we didn't have. But it's not like me and Davis have to or the Esketit team has to have all the know-how in the world. We can attract very capable people that have that knowledge, have that experience. So the same applies to any other vertical. But I would say, though, that is still limited with some kind of logical boundaries. We're not going to go into, I don't know, AI, funding AI startups. Yes, that's completely different to what we understand and what we know how to measure. So we're still going to stick with something where lending is key. Yes. So from that perspective, yeah, I agree with you, but there are ways to go about it.
Can you, since it sounds to me like you're already in an advanced position now, considering or onboarding new partners to the platform, what are the criteria you're looking at? Can you maybe name a couple of aspects that are specifically important for you when it comes to selecting then new lenders?
Yes, I will mention just very high level, very briefly, because we need a bit more time until we can then prepare all of this properly and introduce that to our investor community, etc. And that probably will be done by our CEO. So what we're looking at is a company that has solid track record, so we can test and validate their performance in various ways, through audited statements, through actual management report analysis, and a bunch of other things, the reputation, and so on and so forth. One, and second, importantly, a company that has a lot of potential in terms of the funding needs that they have. So we're not very interested in onboarding someone that has a need for €1 million or €2 million for the next 24 months, because that for us is too small of an amount to make sure that all the effort is worth it. So we need someone that can, attract on our platform 5, 10, 15, whatever, 20 million plus funding, because then the effort of partnering up together, communicating all that to investors is worthwhile. So those are the two key things. And of course, the third thing is something that goes along with what we know how to do: consumer lending, B2B, factoring, loans secured by real estate, and something similar along those lines, where lending is the principle of that business model. So those are the three criteria.
Okay. I was wondering, like, in terms of how the overall profile of Esketit would change then eventually, because to me, it's like when I think of Esketit, and I feel like the benefits most investors are taking advantage of, appealing competitive interest rates, high liquidity, and some sort of a backup safety guarantee provided from whether it's AvaFin Holding or mostly from AvaFin Holding. So how will this profile then change? So assuming you're taking like property-backed mortgage loans, you have business loans, how will this change, like, for you to say, okay, we need to have also a certain competitive interest rate, we need to provide a certain level of liquidity, the kind of safety you're requiring from the lenders? How do you feel like the profile is going to change? And maybe you can talk into the requirements you also have on this level for the new partners.
Yeah, so in terms of the interest rate that we are looking at in terms of onboarding a third-party loan originator, they have to be able to provide something that's within the range of 8 to 12%, because we believe that anyway, investors on our platform, they're looking for basically, what is it? It's a high interest return, right? We will at the moment, we're not looking to onboard something that pays 5, 6% or similar to that. So that's one criteria. So a company that can comfortably generate a return to pay to the investor that level, let's say 8 to 12% roughly. Those figures, it can be like plus minus a percent or something, but I'm just giving a general range. That's one. Second, in terms of liquidity, we don't want to promise to be a platform that provides investors liquidity options at the end of every month, right? That's very uncomfortable for us, actually, at the end of the day, or rather it carries a risk where, if there's a run on the bank or run on the platform, everybody starts pulling out money all at the same time. And we've seen that happen many times before. So in the future, we want to introduce products or agreements with investors where they lock in money with us for at least 12 months or more. Then we have a longer planning horizon. And we're also more happy to pay a bigger interest for such commitment from investors. So that's a second thing. So that would apply also to these third-party investors. So third-party loan originators, right? We'd want to agree with the investors that they invest in those loan originators, same way they've invested in Jordan in a business loan for a longer period of time, maybe minimum 6 months or something like that, maybe get a 0.5% or 1% interest higher compared to those that invest in a payday loan that has a maturity of 1 month effectively. That's a second thing. Third thing, in terms of security, so that here depends on what we will end up, who we will end up partnering with in terms of the third-party loan originator. If it is a group, then we'll see if there's group guarantees available. If it's a standalone company, then we will have to make sure that standalone company has very good financials and or has tangible collateral that we can, in one way or another, manage or register for the benefit of our investors. But I cannot tell you, a combination of which of those are is going to be the end format, because we just don't know exactly the company that we're talking about.
Okay. I want to just 1 second get back to a previous question, because I'm not sure if I framed it correctly. This step towards this direction, which to me is the first time I hear about it. I don't know if you have communicated this already on other channels, on other platforms.
Yeah, we just mentioned we're thinking about it, we're talking about it, blah blah blah. But I mean, there's no point to not mention, because we are working on third-party investor loan originators. We need more volume on our platform. Investors talk about it; they want to invest more, and so very carefully we're working in this direction. So it's just now a matter of months that we launch something.
Yeah. The reason for me picking up on this is just like to which extent this is really becoming a necessity for Esketit to fuel the increasing demand. Because I feel like you mentioned, like, okay, from the current setup you could grow like 5-10%, but that also goes back to my previous question then that I had. How can you sustain a good quality of your loan portfolio? For sure, you know the KPIs, how much you can lend, that it still makes sense for the business without, burning money or going unnecessary risks. Do you feel like you come to a threshold where it's like easier for you to just look at external partners rather than setting up new markets or growing the existing markets that you have, because you feel like you would run into, let's say, unnecessary risk that at some point, or, diminishing the growth then that you could foreseeable have?
Yeah, I'll try to just simplistically give you the way I'm thinking about it and how we think about it. So we don't want to grow a marketplace that has tens of or like many different types of products, because then you're becoming a pure broker and your job is to just have good integrations as opposed to having great products. Yes, or you put yourself in a position where you cannot make sure that people are made good on their money when they invest in those products, right? You just make a commission, etc. So that's not our business model, hasn't been, and for sure, as things stand now, we don't want to become a platform like that. That's one. So therefore, there's a limited scope of companies or loan originators or partners, call them whatever, that we would look at to integrate to our platform. It will be very limited as far as we see for a very long time. So we have enough effort, energy, and resources in terms of people in-house in our team that know the business model, understand it, and can control it as well as I could understand and analyze a payday loan company or a short-term unsecured consumer loans business. Okay, so that's one way of how we keep good steady control and quality assurance on the platform. In terms of why do it? Is it only because we need more volume for investors? The fundamental answer is no, because if we only, the only job would be, to provide more volume to investors, then we would very quickly become a broker that effectively is a brokerage platform where our lending companies become a very insignificant part, right? And so still we are a platform that is primarily built to service our loan originators. Yes. Now this next step of onboarding third parties, we will do at a limited size, very controlled quality, and making sure we know exactly what we do and that the product is interesting for the investor. The additional benefit for us is that with those offering those products or integrating with those new loan originators, we ourselves get exposure to new lines of business that eventually we can become more active in. So let's say if it is secured or mortgage loans or loans backed by real estate, then if we start in that direction and we work for a couple of years and we understand the business inside out as a platform, not as a builder ourselves or as a developer, then that means we have really understood the business model and we can maybe expand by going deeper into that direction. Yes. So that is something that we're keeping in our mind when we will onboard new loan originators, that can be an avenue for us to become more active in with those loan originators. Yes. So with the example of the company backed by real estate, for example. Yeah.
Can you talk about the AvaFin holding, formerly Cream Finance? Like, what are the funding sources for AvaFin holding, if you can just roughly break it down? And do you also have a certain threshold how many of those funds can come through peer-to-peer platforms, marketplaces?
Yeah, so the percentages, what comes from marketplaces, I think it's about a half, roughly, but they come from a few market, like two specifically, Esketit, and another platform that is outside of Europe, but it's not a standard typical, it's more of a fund, rather, to put it this way. It's really a fund, so calling it a marketplace would maybe not be the ideal. So if we classify marketplace funding or crowdfunding similar to what Esketit is, then the Cream Finance's or AvaFin's funding from crowdfunding comes only from Esketit. So that is, I don't know, what is it, like 10%, 15%? I don't want to make a mistake. It's sizable, but it's not significant. Yeah, then there is a sizable amount coming from a fund, a debt fund from outside of Europe. Then we have some private bond placements, which is also pretty sizable, and then some private loan notes that have been made historically, and that's about it. And maybe and a bond fund, that's actually also another fund. So yeah, fund kind of specialized credit funds actually form majority of AvaFin's debt.
And when we talk about
equity, I mean, we have pretty decent amount of equity also.
And when we talk like 10 to 15% from Esketit, do you also like actively try to manage a certain threshold there, or how do you like balance this or calculate it?
I don't balance it at all. It's not my job. It's the job of the team of AvaFin, the CFO and CEO of AvaFin. They are the ones that make decisions in terms of how much they want to give to Esketit. We operate very much at arm's length. They have, many different shareholders. They have their strategy, etc. So it's not like I tell AvaFin what to do and how much money to borrow from Esketit. It doesn't work like that. They are effectively independent of Esketit when it comes to such decisions. But of course, we are the founders and still shareholders in AvaFin as well.
Okay, but as far as you know, because obviously you're kind of in the ownership of this holding, you don't know, like, if you say like, okay, we don't want to lend more than 15-20% then on our own platform.
I don't think there's a threshold. Like, no, I don't think there's a percentage threshold. I think the AvaFin management, they're more focused on making sure that their funding base is diversified, and diversified not in terms of only number of different lenders, but also in terms of types of lenders and the collateral profile. So whether it's secured or it's unsecured borrowing, currency, interest rate. So there's a number of factors that go into the mix when they make decisions. And it's definitely not like, okay, we take, 10% of our borrowings from this company, 20% from that, 50% from another one. It's a mix of those 4 or 5 different factors, and those things keep changing also. So that's how they look at it.
Okay. Very last question, please. Just very short answer. Last year in November, you were about to you were planning with the idea of launching a fund with investments in bonds from the Baltics. What happened to this project?
We had to basically kill it because of regulatory reasons, right? We don't have a license specifically in Latvia and that product would be coming from an originator in Latvia. And then we decided, okay, maybe it's worth not risking some kind of backlash from Latvian regulator, which is known to be pretty retarded, for lack of a better word, pretty difficult to work with, pretty terrible. And so nobody was so interested in launching this, even though it was an interesting test. And we thought, okay, like, you know, the last thing we want is the Latvian financial markets regulator sitting and telling us what to do, unfortunately.